Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday, the 21st of September 2016, and we're looking at the Bank of Japan's decision not to lower interest rates today. The Bank of Japan has kept interest rates unchanged, but said it would aim to keep yields on 10-year government bonds at around current levels of 0%. It's also aiming to push inflation above the 2% target rate, which was set more than 3 years ago, and will continue to buy assets such as government bonds at the rate of 80 trillion yen, or $787 billion a year. Negative interest rates have squeezed Japan's financial sector, and keeping 10-year bonds at 0%, as opposed to allowing them to slip into negative territory, should help banks' earnings and improve returns for insurers and pension funds. The question analysts are asking is whether the policy changes would be successful. Tim Condon, chief economist for Asia at ING, said, quote, "I don't think it's going to be easy to get the 2% inflation target. It's an Abenomics problem, not the Bank of Japan's problem." Michael Hewson, chief market analyst at CMC Markets UK, said, quote, "Ultimately, while these actions may well help the banks, it's doubtful they will help to the Japanese economy that much. And in some ways it shows how little flexibility the central bank has, given how experimental policy is now becoming. To sum up, this morning's actions by the central bank are not so much an easing as a tinkering around the edges of a failing policy," unquote. The Bank of Japan kept its benchmark rate on hold at minus 0.1%. It introduced negative interest rates in January this year, hoping that commercial banks will use their reserves to lend to businesses in an attempt to counter the country's economic stagnation. In our opinion, Japan, being the world's third largest economy, has shown that despite its low interest rate policy over the past 20 years, improving consumer spending is no easy matter. A number of colleagues in Japan's financial circles believe that the negative interest rate policy is a failure and has also hurt the profitability of banks because their excess reserves were hit by a charge. So the decision not to lower rates further has in itself been seen as a short-term boost for markets and the yen, which is now trading lower against the US dollar. But this is unlikely to last. Japan's government must do more to deliver the goods on structural reforms as part of its Abenomics policy to boost growth, rather than continue to rely on the central bank. Will this happen? Yes, it will eventually, either voluntarily or the result of a complete financial meltdown. Time will tell which occurs first. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free member for regular email updates and offers. Our Facebook page, which is updated daily, can be found at facebook.com/illuminatisilver. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.